or he's muted himself.
All right, that's fine.
That's right. We'll give it a few more minutes. Let people arrive. Maybe start 5 past, something like that.
So you can see the screen, right?
Yeah.
All right, cool.
So basically, at the end of this call, once I've read this chart, are you basically guaranteeing that I will have $1 million?
Nah, maybe by next, not this week. Not this week.
If it's not GME, I'm not interested.
You mean if it's not GME, I'm not interested?
Yeah, exactly.
Yeah.
Exactly. But that's one of the things with GME now, which is interesting, is that a lot of people who did not have any exposure to stock market, any knowledge on anything whatsoever, have suddenly become interested, which is good. But the flip side is that they've been exposed with something that is completely unrealistic. Something that's not likely to happen again, very, very soon. It might, but it's not very probable. So now, they have this distorted perception of how the stock market works, kind of thing. And obviously groups like Wall Street Bets don't really help. What happened in the end? Do you know what happened in the end with our main man, Roaring Kitty?
Roaring Kitty. No, I haven't really followed it up or paid attention. There's a lot that happened in terms of there's always, imagine there's 60,000 stocks, right? And there's always someone who's going to be bullish on one company. Roaring Kitty was bullish on GameStop at a time where no one was interested. He did all the fundamental analysis, he crunched the numbers, but I think he mostly just copied Michael Burry. Because Michael Burry is like a contrarian trader. So he crunches numbers like no other, right? So he will be looking at fundamentals, he'll be looking at what the other hedge funds are doing, and he'll build his position based on that. Now, Roaring Kitty just did exactly that. He didn't really do anything new. But I think it takes time for people to actually catch up on these trends. I think it would be a good idea to just go through briefly what chart analysis is, because I think a lot of people did ask me about how do we know which stock is going up, right, without doing all the fundamental analysis. There's one thing that a lot of people don't understand, that the financial world, they have complicated things for people on purpose. They don't need to be that complex, right? So it's that
classic Wall Street perception of there's some secret sauce that you need that only we have.
Yeah,
and the stock market is overly complex.
Yeah, a lot of people do that, or a lot of financial analysts do that because they believe it's the scientific approach, where everything needs to have a cause and an effect, and we need to be able to measure the two, right? Now, market doesn't necessarily work that way, where there's always a cause, and that cause is the reason why the price has gone up or the price has gone down. Ebix Inc. is a prime example because that stock was actually in our portfolio, right? So if you look at Ebix Inc.'s chart, ignore my fancy art on there, right?
Man like Michelangelo.
Yeah, Picasso. All right, so this stock was actually in our portfolio, I think from November time, right? Somewhere here we bought it, we sold it, then it literally dropped while it was in our portfolio, right? And it has bounced from the lows of about $22, $23. It's up by about 38%. Not that we caught the absolute bottom, but the point is, this stock was actually in our portfolio. Now, this crash here, people said, okay, what is it that caused Ebix Inc. to crash? Now, usually people will turn to the news and say, oh, I don't know who it was, accountant or someone auditor who actually resigned or something, and the stock actually crashed. Now, if you really ask someone, okay, tell me this, you're saying everybody sold because the auditor resigned from his position. Okay, fine. Did you buy the stock because the auditor was working in the company? No. So why would you sell the stock because that person resigned? It doesn't make sense, right? Now they would say, oh, but they had like Wirecard was another example where I think there was like a scandal of $1 billion or something, and the stock literally crashed. Now a lot of companies like Goldman Sachs, Morgan Stanley, they were invested in Wirecard. So when that happened, it's not like anyone could have seen that coming. These are things we can't actually anticipate, but there's enough signs in the market. Like when Goldman Sachs and Morgan Stanley were buying the stocks of Wirecard, the price was already dropping. It's not like they were trying to time the bottom or anything. They buy it for whatever reason, right? We can't ever know why the stock has crashed or why it has gone up, but there's enough signs in the market just by looking at the trends, where you can actually see that price is going up or the stock value is appreciating. Now, how do we know this stock is likely to appreciate over time, right? And that's where you have two different approaches. You have the fundamental analysis, where people would look at, financial analysts would look at the how much profit the company has made, how much the shareholders have gained over the past 5 years. What's the financial projection for this company over the next 3 to 4 years? These are things that you can always look at, but that doesn't tell you what's going to happen in between that time while the stock is going up. It can literally, like exactly like this Ebix Inc., right? It bottoms in March somewhere here at $8. And then it rallied all the way to $60, right? Now, we know that future projections for Ebix are pretty positive and it's a solid company. But in between, we don't know what's going to happen. So how do you play that? Does everyone here know how to read the charts? Just so I know, I'm not really just... Sohail, do you know how to read the charts?
Yeah, people who are on the call, if you're listening, just put in the chat a yes or a no to let us know, if you know how to read a chart, or if there's any specific question, because I think Abdul's going to go over like a general overview of how charts work in general. We're just going to assume the lowest denominator, i.e. someone not knowing at all. But let us know in the chat how comfortable.
Hey there, Sohail. Sorry, I think the chat is disabled, so I can't really go down that route.
Let me check if I can. Yeah, you know what? Just open your mic if you can. Unmute yourself, and then you can just tell me. Other than...
Yeah, I think from my perspective, I guess you could say bare minimum in terms of reading a chart. I can see what the numbers mean.
Yeah.
I can interpret the chart effectively, but anything past that, it would be kind of unknown to me, really.
Okay, so let's look at
Abdul, do you have the chat unlocked? Did you get a chance to do it?
Yeah, I'm trying to unlock that in case if someone needs to comment.
Because some of the guys and gals might not have a mic.
All right, so all right, there you go. Chat should have been enabled now.
Yeah, there we go. Testing. 1, 2, 3.
Yep,
there we go. Excellent.
So does everyone know the chart reading, basically? Just exactly what's happening with the charts?
Mohammed said, I'd prefer if you went from the basics.
Asad said, no experience reading chart. Well, you're a doctor. I didn't expect you to, Mr. Asad.
I hope he's not referring to medical charts. Then we got a problem.
Yeah, sorry, we don't do that.
No experience either.
Okay.
All right.
Fine.
Let's just start from no experience then.
So let's just look at so what exactly is happening with the charts. Now, before we get to that, why do we even invest in stock market? Most people, they would invest in stock market for multiple reasons. Usually it's to do with and as in there's a cycle. If you look at, I mean, stocks have been around for at least 2 centuries now, right? The stock market. This is one of the best ways for your money or the value of your money to appreciate over time. So this is like this is what attracts people to stock market. It is one of the best ways to actually grow your money. But if you really look at money as a whole, it's all of the money is not actually in stock market. Only 10% is parked up in stocks. The rest 90% is in money markets or foreign exchange and all of that. That's where the money is really parked up. So whether the stock market is going up or down, it doesn't actually reflect the state of the economy. Now, sometimes you can have stock market as a leading indicator, which means the stocks will crash and then the economy will follow through. That's exactly what happened last year, where stock market crashed in March time, and then everybody's hearing about the recession worse than the Great Depression in September time, right? So that's a leading indicator. Sometimes stocks can still be rallying while the entire world going through a recession. That's what happened in during the Great Depression as well. We look at the charts later on. So stock market is not really an indicator of how the economy is doing. Sometimes there's a correlation. Sometimes there's literally no correlation. They're inversely correlated. So we can't really predict the economy. And then based on that, we predict how the stock market works. Some hedge funds do try to do that, but it's very difficult when you're looking at the numbers because there's multiple variables and you don't know which variable is the one that is necessary at this point in time. So that's the fundamental approach, right? And then comes in the technical analysis. So people who do technical analysis, they are really considered the heretics in finance because you're doing something that's pretty much an art. It's not a science. It's not something I can say, okay, every time you see a number or every time you see a chart, draw the lines and draw some triangles, identify some patterns, and market will go up. No one knows that. It's pretty much an art. It's very subjective in terms of how everybody reads the chart. So the way I read the charts is going to be totally different from someone who reads a chart and he's been doing it for 20 years. And you try to compare the two and you say, hang on, this guy, the way he's doing charts is totally different to the way this guy's doing. And then you go to a third person and he'll do exactly the same thing as the other one. And then you're like, okay, what's really going on? And you try to establish some form of agreement between the technical analysts. There's no such thing as that. You can get the basics of what's really happening, and that's more important than how to read the charts in terms of how that person specifically does it. So chart reading is essentially built on the foundation of supply and demand. So supply and demand is what's driving the prices up or down. All the economists believe in that as well. But the thing is, the economists suffer from what they call in finance analysis paralysis, where they try to crunch numbers and try to figure out where inflation is and try to figure out what's happening with interest rates, and then they're not able to make money. The economist is a prime example. They have all the data as an economist, but they're not able to make money. So what's really going on? That you can't really identify the right or wrong here. It's just what really resonates with you. In finance, a lot of I remember in HSBC on the trade floor, most of those guys don't actually pay attention to the charts. They're just looking at the data. They're looking at the earnings reports. They're looking at what's happening across the world, but they're not really paying attention to the charts and saying, okay, here's a support line, here's a resistance line or whatever, right? So we're just going to look at the basics of the charts where we simply look at what's really going on with the charts. So when someone is looking at the charts, all they're looking for is supply and demand. So they're trying to identify at which price buyers are stepping in to buy that stock or an asset. And they're looking at what price the sellers are stepping in and selling that asset or stock. That's literally what they're doing. That's the foundation of technical analysis. Also the foundation of economics, but it's not something that they really spell it out for you. So if you look at the price of Ebix Inc., right, on 18th of Feb. By the way, you guys can comment if you want me to, if something doesn't make sense or you want me to go over something. So just let me know. I have the chat open anyways. or if you want me to slow down or whatever. So you have the chart of Ebix Inc. at last year in Feb. So the price literally touched $38.86, and just you have a huge sell-off in the market. And then it went to as low as, so we'll mark that level. It went to as low as 871. Quite a big sell-off, right? So now, just by looking at this, we know that this is the price, 38.21 is the price where sellers stepped in and said, okay, no, you know what, we need to start taking profit. And there was a huge sell-off followed after that until the price hit $8.50. And then you have like a huge rally from there all the way to $31. So buyers have stepped in at this point. As a technical analyst, this is what you're really looking at. So the buyers have stepped in at 880 and they're just buying up the price. Of course, it doesn't always happen that buyers and sellers don't exist in a vacuum. They're basically buying and selling from each other. So the price is rallying because the buyers are stepping in and saying, no, I do not want to miss this price. I want to basically skip the queue and pay whatever price it is and just have the asset, because ownership over asset is more important to me than missing out and waiting for a pullback or for the price to drop a little. Yeah, they're not trying to haggle at this point. So when that happens, the buyers are really in control. So what that means is sellers could step the price, drop the price to $9, and then there's a buyer who literally buy it up. Then the seller starts thinking, hang on, the prices are rising. Maybe I need to start raising my prices to actually profit from that. And that's when the buyers will literally keep taking the price, until it comes to a point, say $30, where the buyers say, no, the price has gone way too much. I don't want to buy it at this point. And they'll basically wait for a pullback. And that's usually what would happen. That's the basics of what's really going on with chart analysis. So when you're looking at the charts, you're trying to identify those levels where you think the price is likely to start, basically the buyers will step in and raise the prices up, or the sellers will step in at this point and drive the prices down. That's all you're trying to identify. There's no holy grail. There's no right way of doing, like this is the right way to do it, or it's literally just depends on what really works for you and what doesn't, because technical analysis is more of an art, as in it's subjective, than a science where it's objective. Regardless of what you say, this is what's going to happen, right? So that's all that's happening with chart analysis. So some people would look at what's called the candle charts, right? It looks completely different to the line chart, right? But all they're looking at is, so let's zoom in on this one, right? So when they're looking at the candlestick chart, what they're really looking at is on this day, 27th of Jan, the price for Ebix Inc. opened at $47, right? So this is the price when 9 o'clock, price is $47. Then the sellers stepped in and they drove the price down to $45. That, that line, the wick there, that's what it's saying. The price literally dropped on the same day to $45, and then the price literally shot up all the way to $64 just within that same day, from 45 all the way up to 63. And then the sellers stepped in and they drove the price back down to, what's this level, 58, right? So the market at 5 o'clock closed at $58. So that's all they're looking at. So what exactly happened on this day? That's what the candlestick charts are trying to tell you. That's the data that they have. And then the next day, market opened at $60 and the price went up to 62 until the sellers stepped in and drove the price all the way down to $50. And then the buyers said, okay, this is a good place to buy. 50 is like a round number. So they stepped in, they tried to buy it. By the time it's 5 o'clock, market closed at $52. That's the end. So this is the data the candlestick chart contains, which other charts don't. That's the reason why people use that chart. This is just showing you at what price the market closed on that day. That's all. If you're looking at it from a long-term perspective, you don't really need to look at the candle charts. You can just look at the line chart. You just want to identify what's happening with the price. Are the prices going up, or are the prices going down? So you're trying to establish a trend. So when a technical analyst is looking at the charts, all he wants to identify is there an uptrend? An uptrend is identified by highs and lows, what they call the highs and lows. So the market bottomed at this point. It topped at this point. That means it pulled back, but it didn't drop all the way to this level, which is $12. And it bottomed at this point around $18, and then the market rallied again. So now what has happened is we have an uptrend, what they call the market is trending higher. So that means the buyers are stepping in and buying every pullback. So once you have an uptrend like this, what you can do practically is, say you buy the stock at this price around $16. It goes up to 27, you've almost doubled your money, and then the price comes all the way back down to 17. Now, you don't need to get out and think the stock is going to go to zero. You actually need to trade if you're following the trend, you need to trail your stop loss. So once the price actually drops to $17, you can say, okay, the price is rallying, right? So you can trail your stop loss. Stop loss would be the price where you exit the market because you think the trend is now going down. So the stock is going to start basically reverse the trend. It's not the only reason why you're buying the stock is because you think the prices are going to keep going higher. If you can identify a trend change, you can get out profitably long before the market crashes. And that's what technical analysts are able to do. They don't always successfully pull it off, but that's what they're able to do. Just identify the trend changes. So if you bought it at $16, the price is rallying, you can just move your stop at this point. That means if the market actually drops from this point, you're going to have to, sorry, who said that? Check. I don't see that. No, sorry. I don't think anyone's waiting to.
Okay, cool. I was just double checking.
Okay, no worries. Okay, so basically all you're doing is you're trying to identify the charts.
Why is a stop loss important?
Okay, so the stop loss is important because
this plays into risk management as well, isn't it? Which is one of the conversations we were having in the group.
Yeah, so stop loss is important where if you were to buy the stock and you think it's going to go up, but what happens is stock actually crashes, which is what happened with the Ebik sync, right? Now, if we had a stop loss in place, then we would have got out for a profit of say 2% or something, rather than being at a stop loss of about, rather than taking the loss of about minus 50 or something %, right? Now, that's where stop loss actually comes in because we don't know what's going to happen with the stock market. Now, we need to look at one chart because I think we kind of avoided this stock, luckily, but Viacom Inc. Right? So I think Shahnawaz would probably remember this one because this stock actually came in around October, November time or December time, where it was on our list. And we bought this as Cortex 15. And then all of a sudden the price hits $100 and literally the next 2 to 3 days, it crashes back down 60%, right? That's Viacom CBS. You can't really predict that this is what's going to happen to us, to a stock. So if we had a stop loss at say $85, we would have given back about 15% of our profit, but we would have definitely not been down 60%, right? So that's where stop loss is important. It's more of a risk management where every time you buy, you should always remember there's a high chance that you can also be wrong with your analysis. Trend isn't always up, right? Unless you can identify that the trend is going up and then you identify which level you're likely to be wrong or which level you're likely to exit. That's more important when you're looking at the charts. So that's where stop loss would actually come in, especially when something like this happens, right? Right, so before I go on, is there anyone who wants to ask anything about what I've said so far?
Yeah, Abdul, quick question from me. Sean was here. In that regard, the Cortex 615 strategy, should there be effectively a stop loss in there? As you say, we were in there. Which one was it? Sorry, it was Ebix actually.
Ebix.
We dropped So it's obviously not something we predict, and Cortex 15 is quite basic in the sense that you shift in and out every week. But again, that Ebix thing happened midweek or whenever it did happen. It's to that effect. What
Now, should we have had a stop loss for Cortex 15? We can do. The thing is very difficult unless you're monitoring the charts. Now, the idea behind Cortex 15 is, so it's a 10-point criteria when we're looking at 3 factors of profitability and looking at whether the company is creditworthy, right? That's the main thing we are looking at when we are trying to analyze or shortlist companies. If a company makes it to the Cortex 15 list, what that means is the trend is up, definitely. The company is profitable. There's no issues in terms of creditworthiness. That means if these guys are borrowing money, they're not gonna basically have to liquidate their assets just to pay back the debts, right? So it's a decent company. It's not going to zero. That's all that's doing. So Cortex 15 is just analyzing the trend. It's analyzing the profitability of the company over the next 2 to 3 years, and it's looking at whether this company is creditworthy, right? So these are the factors that we're looking at. Now, in terms of the trend, that's only one aspect out of many others where if the trend suddenly changes, but the company is still profitable, what would happen is instead of getting a ranking of about 8 points, it would end up getting a ranking of 6 points, right? So it's still the majority, as in it's still meeting majority of my criteria, but trend can literally drop like Ebix Inc. And the next week, the trend is back up. So it crashed all the way from, say, 50 down to 22. And then 1 week of just sideways movement, and then it's just stocks just going up from 23 all the way to 32, right? So there's no way of actually predicting what's going to happen in terms of trend. Once the company makes it on the list, the idea is it's always going to be the top 15 companies, and those are the ones that we're going to invest in. Should you have a stop loss? Yeah, you can have a stop loss, but the thing is, at what point will you say this is the drop that I'm willing to exit the price for, and this is the stock where this is the price where I need to get back in? So it's very difficult to predict that, especially when some of these companies drop about 20%. Ideally, you should have a stop loss for about 7% on your entire portfolio. That means if you got £1,000, or let's say £10,000 in your portfolio, at no point should you drop $700, right? £700 within a week, because that's pretty big. But when you're invested in Cortex 15, you're diversifying your £10,000 across 15 different stocks. So even if one drops 50%, it's only about 3.5% drop hit on your entire portfolio, because all the other stocks should ideally be up. So you shouldn't have a 7% drop on your portfolio. So you can play it like that, where you say, okay, I'm going to have a stop loss of about 7% or 10% on one stock, and then basically get out if it drops that low. But what happens is it'll drop to 7%, usually Monday morning panic, when stocks really do drop. They drop by about 20% or something. And then over the next 3 to 4 days, buyers step in and literally the price rallies. Like literally what happened with Ebix, right? Over the next few days, the price just rallied all the way from 22 to 32. So you won't really know whether this is the right time to exit or not. That's why I've said in terms of the Cortex 15, best thing to do is to just diversify it across 15 different stocks and hold on to those positions from Monday to Monday. So you're holding it from week to week rather than exiting, because then it becomes more like trading, right? The idea of Cortex 15 is for you not to trade, for you not to make those decisions, because most of them are going to be to do with emotions. I personally hate that. When I'm looking at the stock, I'd rather enter my positions. I'd rather do my chart analysis when the market is closed. I never try to do that while the market is open, because I know it goes into FOMO. It goes into you have that fear of missing out, or you start panicking, thinking, oh my God, the stock's crashed, I need to exit. No, because stock has crashed, but the trend, if you really just zoom out and you see, the trend is still intact. Like, it's still going up. So yeah, it's a drop from 65, but the price can literally just go sideways for the next few days. Company's still positive, and then next thing you know, it's back up at 75. So there's really With Cortex 15, I personally would not try to use the stop loss. I personally don't. And I've been following it for at least about 2 years now, where I don't use stop losses on Cortex 15. Before I used to, and I feel like it doesn't work out the way I want it to now. So I won't use a stop loss for that. Maybe you want to use a stop loss for the the exclusive trade positions that I share. That I always highlight. Here's a stop loss. Here's your entry point, and this is the target. And after that, if basically the stock drops to that level, you need to be disciplined enough to exit straight away, rather than holding on to it and thinking, no, maybe this is like Ebix Inc. Maybe the price will go up. No, you don't want to do that. The market doesn't care about our hopes and dreams. It really doesn't. It has a mind of its own. People try to anticipate what's going to happen, but it's very difficult to really predict what's going to happen in the market. Same thing with Ripple. Everybody keeps asking me about Ripple. Like, is Ripple a buy? Is Ripple not a buy? Now, if you look at Ripple's chart, right, XRP USDT, it's up at 131, right? Now, it was down to around 12 cents earlier last year in March. Now it's 131. Now, is it a buy? Is it not a buy? I mean, the trend is still up, right? If you're looking at the trend and the price is still going up, you buy it based on the fact that trend is up. We don't know what's going to happen with Ripple over long term. That's the reason why a lot of people who come to technical analysis and avoid doing fundamental analysis will find trading cryptocurrency a lot more easier, because there's no fundamental analysis you have to do. Or you can only do chart analysis, you can only do technical analysis. But if you were to do fundamental analysis, it's just not going to work, because there's no framework for us to measure the profitability of Ripple or Bitcoin, because these are not companies. There's no, board that you can go and analyze who's running the company, how much experience they have, is the company profitable, what's the future projections, if they're going to make money or not. We can't do that with crypto. So the only way you can do that is with chart analysis. So when it comes to chart analysis, you must always have a stop loss, because there's no way we can predict what's going to happen with the price. And remember, like I said, technical analysis is just about supply and demand. So the price is going up, that means there's huge demand in the market. That means people are willing to pay whatever price they can to get into the market right now. They don't want to wait till tomorrow. And that's what happens with Ripple. And that's also the reason why people get screwed over in the long run, where they're buying the tops, right? Where people are selling, they're coming in and buying the tops thinking Ripple's going to go to $2. It might go to $2.
Might be a good idea to use GME as an example. I think that is a prime example.
Yeah, GME is a prime example. Yeah, GME is a prime example. All right, so here we are, 158, GameStop.
The mother of all stocks.
Yep, the meme stocks.
That's it.
Okay, so remember, we basically bought GME as part of some of the subscribers last year. It wasn't, Penny Mountain wasn't there, Wealth Cortex wasn't there, but it was just a group of private subscribers. And we ended up buying GameStop at around $4, right? $4.30, simply because I know that when you have a chart pattern like this, all that's happening is, here's one thing you have to remember. All that's happening with charts like this is you have buyers who are coming in and accumulating the price within this range. That's all that's happening. When you have a sideways market, you only have two options. The price is going to go sideways, or it's going to break out of that sideways range, either up or down. But we don't know which direction is going to go up, break out on, right? Unless you really know chart analysis and you can study what's happening with the buy volume, and you can look at what the buyers and sellers are doing in the market. So by looking at the chart, I could easily see that this is a pattern I've actually seen so many times in crypto, in stocks, in commodities, where all the buyers and sellers are doing at this time is they're unsure which direction the market's going to break out. So people who bought it at this range at $3, they're basically trying to break even or get their money back. So as soon as the price reaches $6, they would have almost doubled their money. So they'll get out. You have another sell-off. And just when it reaches the same buy point as before, a lot of buyers are stepping in and thinking they can ride the price back up to $6 or something, double their money and get out. So this is just a sideways range between buyers and sellers. That's all they're doing. It's a battle between the buyers and sellers. And then at one point, either the price will crash down from this level. It can either break down, right? Or from this level, it can go up. There's only two options. Once it's in a sideways range. There's no other alternative. So what you have to do, this is something that you can implement, later on as well in your own private trading, whatever you do, is once you identify a sideways range, just wait for the price to break out. Don't go in and, we bought it at this range because I've seen the patterns, right? But most likely, unless you really know that these are the patterns and this is what you need to identify, don't go in and just pull the trigger and buy it because you think the price is going to go up. It most likely won't go up. But when you really see that the price breaks out of a range, which is right here, right here, look at the volume. This is basically the volume. That means buyers and sellers are stepping in, and while the price is going up, the volume is high. That means a lot of buyers are willing to pay the higher price because they believe the stock is going to go up to at least $8 or $10, right? That's why you have the buyers coming in. So this is a strong signal that the trend is now up. So the sideways accumulation has been done. A lot of hedge funds were buying in this range. So people think, oh, this whole thing is actually Redditors. There's no way Redditors have this much money to drive the price from $6 all the way to $300, $400. They don't have that much money. There's no liquidity. There's not enough liquidity in the market. This is all hedge funds. This is institutions who drove the price up because they're just buying in blocks. This is called block trading for hedge funds. They basically don't place the order. Imagine going in buying 1 million shares. You're gonna literally spike the price. So they break up the order and they basically buy say 10,000 at $3, 20,000 at $5. Then when the price pulls back to 2, they buy in 50,000. So they do it like that. So this whole thing is just a reflection of institutions getting involved. When you see something like that, you know the price is going to break out, but you just have to be patient, right? You just have to wait it out because this whole thing literally took how long? The range is from August 2019 to September 2020. So literally a year worth of range of accumulation, and then the price breaks up. So you have to be really patient when it comes to these things. With Cortex 15, we don't have to do that. We just buy stocks that are currently trending. We make our 1 to 2%, compound it. Next week, we come back and we buy stocks that are now on top of our list. And that's it. We don't have to worry about this sideways accumulation. Oh yeah, I believe in electric vehicles are going to go up. Tesla stock's going to go up, X% over the next 2 years. But that's your money parked up for 2 years. You could be making money in the process. When it comes to breakout range, like this one here, you can come back and bring all your profit back to GameStop and then buy it. So this is basically where institutions stepped in and basically they're the ones who kind of caused the market manipulation and everything.
And that was counter to the narrative that was being pushed by the media, by Reddit, by everyone, and everybody else flooding in, was that this is all Redditors. This is the people against the system. The people are winning. That's why the price is going up.
People love a narrative, right? People love when there's a story. People love when they can make sense of something, right? So what happens is you have data that always comes in first. Whether the company is making money or not, you'll have that data. Then price will reflect that data. So the price will either go up or down based on that, how that data is perceived. That data is not, always publicly available, but the price will always make sure that it's somehow some investors or insiders will act on that information. So you'll see that in the chart. Whatever the GameStop is going to be profitable or whatever, believe me, some insider had all that information this time. They had that and they were buying up. And there's no way you can get access to that, right? So people were accumulating. Then once the price has moved, right, from $6 to $320, that's when the media will pick it up and say, wow, this is a story we need to talk about. And they're writing articles about how GameStop and what the Redditors have done. And, there's a David and Goliath type, narrative. And everybody would, get hyped up. Wow, this is really nice. And then, all of a sudden, people go in and buy it. I mean, I'm not trying to laugh at the fact that it's happening to them, but it's a foolish decision, because you're going in and you're buying at $270 when the price has moved from $6, right? It's at 4,000% up. And you're going in and you're buying.
Which brings us back to that point earlier that you were making about Ebix, buying in too late, basically. So that's shown quite well on this graph, isn't it? Right? Worry about where your mouse is now.
Yeah, I mean,
this is where people were buying in, because they didn't know when it was going to stop.
I mean, people are still, like, they want to go, in Reddit terms, they want to go full ape. Yeah, they want to go full retard on these trades, and they're talking about diamond hands, right? Look, you don't.
If you're holding, I'm holding.
Yeah, if you're buying, I'm buying, right?
That's it.
That doesn't work in stocks. You have to, like, there's people now, they're down about at least 50%. Their entire portfolio is down about 50%, 60%. And you're telling them, hang on, what happened here? And they're like, oh yeah, well, I don't care. It's and we're talking about 15, 20 grand, right? It's not just 50, it's like 15, 20 grand, they're down. So they invested 50 grand. Now, if you have a strategy in place, if you know exactly what you're doing, your portfolio won't be down 50%, even if you don't care. This type of mindset is a recipe for disaster, because one day or another, you'll have inshallah, you'll have a portfolio of about 1 million, 2 million, 3 million. If your portfolio is down 50%, it's not the same as it being down 14 grand or 20 grand or something, right? It will have an effect on you. And it doesn't always stop at 15 grand. It can drop down all the way to zero and your entire thing is just wiped out, right?
So from a technical analysis point of view, what's the lesson then that you would derive from GME, or basically getting out at that right time? Is there a perspective from a technical analysis?
Okay, so from technical analysis perspective, right? Because we entered at the accumulation time and we exited at basically the right time, right? So if you're buying at $4, because I know that this is the pattern is going to play out, we can look at some charts and then see that this pattern plays out quite a lot more than quite often, rather than just it being something rare. So here's an accumulation range, which means people are accumulating and the price is going to continue higher. But we need to wait for a signal. So one, you have a pattern. You identify what's really going on with the charts. Are people accumulating? Because this is also an accumulation range, just to be clear. This is also an accumulation range, right? This is also an accumulation range. So don't think when you see a range like this, you just draw a box on it and then automatically the price is going to rally. No, that's not what's happening. So you have to remember, yeah, the price is basically going sideways. It's either accumulation or it's distribution. Distribution would mean now the sellers are stepping in and they're locking in their profits, because now they're expecting the price to actually just go down, right? So it's time for them to get out. Other buyers are stepping in thinking this here is the same as this one, so the price is actually going to go up, right? They're expecting price is going to go up from here, but it doesn't. Price actually crashes down here. Then they do the same thing here. Price is going to go up, right? Assuming, but then it just crashes down. And then the third time, they're right. And that's, to be honest, in stocks, you just need to be right. Even if you're right 33% of the time, like in this case, you'll make a lot of money, right? So it's just a numbers game. It's just, you need to stack the odds in your favor. And that's what we try to do with Cortex 15. We try to stack the odds in our favor by buying stocks and in companies that are really doing well. Everything looks nice. Their fundamentals are great. The trend is up. They're in a sector that's going up. The entire stock market is going up. So these four factors are basically determining whether the stocks are a buy or not. And only then we go in and sort of make the purchase. And then 60-70% of the time we are right. Some of the stocks don't work out. Some of the stocks you have to sell for 3-4% loss. But that's fine. That's the cost of doing business. That's just operational cost, right? But here, In this case, it's the same pattern. This is distribution. This is distribution. This is accumulation. Why? Because we don't know whether this is accumulation or distribution at this point now. We only know it once the price or the market tells us which direction is going. So this is important to pay attention to, where identify the pattern, wait for a signal, wait for a confirmation on your belief that the price is going up, which is at this point here. So the confirmation over here is that, yes, the price is going up. The confirmation here is that you're wrong, get out of the market. This is where that's your confirmation that you're wrong. You need to get out. Same thing here. You need to get out, right? This means you need to stay in. So we're going to stay in, right? The price is going to go up to the previous range, which is right here. Right here. This is a range where we know that the price is going to basically just go sideways, right? And then if it breaks out of this range, we are targeting this previous range here. These are just reference points. These are not like holy grail or like gospel that this must happen or this must not happen. These are just references, right? So we know that once it breaks out of this range, now we are ready to lock in profits, right? So we're selling some over here. We are taking profits along the way. And then the moment everybody hears about it in the news, you almost always, you have about 2 weeks to get out. Like you literally have about 2 weeks, because people usually talk about things for about 1 to 2 weeks, right? Who's talking about Meghan Markle? That was like, everybody was talking about it, right? No one really cares anymore. Yeah, people will make reference to it, but no one really cares. Many examples of recent events that have happened, people will talk about it. After 2 weeks, bring me a new story. It's old now, right? And that's the same thing with stocks. GameStop is a prime example, right? When this is the time when media is picking it up. In January time is when the media's picked it up, right? When everybody hears about GameStop, stocks rallying, you have about 2 weeks to just start locking in your profit, because when people forget about it, they literally dump the market. That's literally what's happening. It's just people playing between like what people are doing is basically a way for us to determine supply and demand in the market. That's what it boils down to. So when you're looking at a chart, don't look at a candlesticks, don't look at lines on the graph, don't look at anything. You're just trying to determine whether this is supply or demand and which level those two will kick in. That's all you're trying to do. You're not trying to do anything else.
Yeah, so I think one of the key takeaways there then is to really always remember that there is, and if anyone's saying that they're predicting, run the other way. It's just more about getting very, very good and consistent at pattern recognition, and then having the patience and the diamond brain, to coin our own phrase, psychology, to be able to just wait for the signal and then act accordingly.
So it's basically you have to have a strategy. By the way, Shanwal, does that answer your question?
No, yeah, that's very helpful. Thank you.
So basically, even with chart analysis, what's important is you're focusing more on supply and demand. You're not looking at patterns. The patterns are just a way of identifying the supply and demand. So if, for example, if you have a chart, right, and it's just going sideways, like for example in this case, right, it's just going sideways in this range. I need to find a better chart. Let's look at Bitcoin. BTC, USDT.
That's a beautiful chart.
Only if you bought it.
Yeah, exactly.
Only if you bought it.
Otherwise, the FOMO chart.
Otherwise, I think this will be like the tulips, right? This is one thing that people are going to always remember. Now, here's another way to look at it, right? Rather than, I still remember this because I remember trading Bitcoin in 2016 or something, right? This is when I was newly getting into, like the market, and I was looking at stocks, and someone told me, it was actually Ustad Brooks who told me about Bitcoin and whatnot. And, he was basically talking about how Bitcoin is, like the technology and stuff like that. So I was trading Bitcoin around these levels, right? Around October 2016 times, right? I had no idea Bitcoin is going to go to 20,000. But the only thing I was concerned about is the trend. So if the trend is up, that means people in the market are still buying this coin, but they're not talking about it necessarily. Exactly where people started talk about it is this level here. This September, October was the first time a lot of people in the news heard about Bitcoin. And remember, I'm looking at it from July 2016. No one knows about Bitcoin, right? I don't even know if this thing is going to go up to to 20,000 in 2020 or whatever, right? No one knows, right? And we're just trading it here and there. And then next thing you know is the price is just going up. The trend is up. The only thing, like the one that we did, was just every time there's a crash, we mark it as a low. The price rallies, pulls back, mark it as a low. Then the price is rallying, pulls back, mark it as a low. Now, at any point, if the price literally turned against us and did that, we'll get out. That's all we would do. We'll basically get out at this range because it's broken the last low. And that's what trend analysis, that's what people who are doing trend following in terms of trading, that's all they're doing. They're just looking at those levels, right? That's all they're doing. Could you have done that? Of course, anyone could have done that. Now, same thing is true when the price is actually coming down. Now, if you look at this level, if you look at just this level here, what's happened is, where is it gone? All right, replay. Right. So this, remember, this is the low that we marked at 58K or something. This was a last swing low, and the price basically went up. Now it dropped again to around 11,000 or something, and then it's just going up. At this point, everyone in the media is talking about it. Everybody wants to know, oh, what about Bitcoin? I want to buy. I want to buy. I know some people who actually bought it at 18,000 or 19,000 or whatever. Right? They did buy it, even though I told them, look, price seems to have been extended way too much. We need to just wait for some form of pullback before we can actually buy it. So you draw this level as your, what we would call the demand level, where we would expect demand to step in, where we would expect buyers to say, no, the prices are cheap, let's buy up, right? And this is the price where sellers would say, no, this is the level where sellers would say, okay, once it reaches 20K, that's when we need to start selling. And that's literally what's happening. It's just supply and demand, right? Price is going down. It's not making any highs. This is just a sideways range of Bitcoin until the price literally crashes, right? And that's it. You just basically wait for the price to come to a level for it to actually bounce off from, right? So there you go. So now that alone, that candle alone shows that buyers have stepped in. So we can easily say that this level that we have just drawn, we have just marked on the chart, 5,850, is a level where a lot of buyers are likely to step in. But that's also the level where sellers are likely to say, no, hang on, what's really going on? We are kind of confused. So that level of confusion is likely to create that, the box that I was drawing, where people are likely to just, buyers and sellers are likely to battle between themselves. Prices are going up and down. We don't know which direction it's likely to head from. So you can mark that as a level, right? So we'll basically wait for the price to play out. Now, this is where a lot of trend analysis and chart analysis will help you in determining what's actually going on with the charts, right? So if you wait for the price, you look at it again, where as soon as it drops to that level, suddenly the buyers are stepping in. So we know that level is a key level. Like, look at that. It literally just touches that and then it just starts bouncing up, just that alone. So this is just confirming that this level is a key level, that the price needs to hold this level, or the market needs to hold this level before any trend direction becomes clearer, whether it's up or down, right? So you can buy at these levels, hoping that the price will bounce, but you have to be very careful. This is more going into trading, where you have to be very careful that you use stop loss, where you say, I will buy it at this level. Next time the price comes in, don't put it right at the dot, because just like this, price didn't come exactly on the dot. It's literally 800 pounds off, right? So you can buy it at this level, put your stop loss, say 10%, right? Just below the level. and then you're targeting, oh, hopefully the price will go up to 14K or whatever, right? And when the price starts going up, you can move your stop loss. You can from a loss, you can put it as a stop break even type, where you can say, okay, at least you'll get out on break even. If not, you'll get out on when next time it hits 6,700. So you get out on a profit, right? But this is a very much calculated and a strategic way of trading. You see, as soon as the price went up, at least you locked in for a profit rather than you getting out on for a loss or something. And when you have price doing this, like a downwards sort of contraction where price hits this level, 11K, drops down, tries to reach the same level again, but it's pressed down. So you know that these levels are the same, right? There's something happening at this level. Then the price tries to rise up to 10K, right? Fails to do that, and it literally drops. So these three are basically now the levels. So now price, this is almost like a descending triangle, right? Where price is contracting down. That means sellers, as soon as the price tries to go up, sellers are pressing the price down. So sellers are stepping in and saying, we want to lock in our profits. So they're coming in heavy and they're basically suppressing the price, right? Eventually what's going to happen? One of the two is going to win, which means buyers are either going to have to step in twice the amount of sellers and drive the price up, or the sellers will win, take control of it, and price will be driven down, right? We just have to wait and see how it works, right? There you go. And that's the sell-off. And now we just need to wait for the price to show us that the trend has now turned positive, and we just wait for that. So this whole time, while everybody's looking at Bitcoin, right, you could have been trading other stocks.
And just a point on that is that if you look at because I think one of the things that can sometimes happen when you're staring at charts or too much, right? Is that it's easy to forget the timescales here. Like if we look at for example, just where you finish drawing, if we go straight to the bottom there, we got November-ish. Yeah. And then it's starting, and then look, that's May. So sometimes when you don't look at the time, you think, oh yeah, this is like what? There's like a few weeks. You get into that kind of trap. Yep. So the whole waiting aspect is not as, sometimes people who are new to trading or new to investing think that it's overplayed. Yeah. But when you look at it in the contextual timeline, it's not overplayed. Like you are literally sometimes waiting 5, 6, 7 months,
And it requires a lot of patience, which is why I try to tell people that, look, you can't make quick money in stocks. You can't make quick money in Ripple. Obviously, like
really? I want a refund.
So you can't listen, mate, you're in the wrong group, all right? So you have to remember that, you have to play the long-term game, right? Now, if you really play the long-term game, you're likely to catch 1%, 2% here and there. Now, if you want to be, make quick gains, it's easy. Start with £100 account, right? Make 1% every single day. At the end of the year, you'll have at least 30 grand, 40 grand, because you're compounding, right? One day is 1% on 100. Next day, you're trading with 101, and then so on and so forth, right? In 300 days, you could be through it, like 30,000, 40,000 easily. But that's the math. That's not the reality of the market. Market doesn't work like that. Market has a brain of its own. You're going to have some days where market is down. You're going to have other days when the market is up, right? So it is possible, but it requires a lot of work. It requires a lot of patience, and it requires a lot of discipline. But if you were to do that, like over a long term, like long period of time, stocks are always going up. Then, as in, no, not stocks are going up. Index funds are always going up. S&P 500 is always going up. Why? Because it's always composed of 500 companies in US, and they keep taking companies out, putting companies back in, and that's basically tracking those 500 companies. That's also your belief in US economy, right? Where if you believe US economy is likely to lead over the next 10 years, invest in S&P 500 because they're always going to go up by 7%. But if you were to invest in a stock of a company, it's not necessarily always going to go up, no matter how good the company is, no matter how much you love the company, right? And that's why I say, don't try to fall in love with the company. Don't try to befriend the company. Company's there to help you make money. That's about it. So make your money and take it elsewhere to another company. But you gotta be really disciplined to do that. If you just buy it, like a lot of people did buy Bitcoin, for example, at 19K, right? Of course they have broken even. But I know for a fact the mental stress based on the messages they used to send me, I know it's not like happy days to hold through a 90% drawdown on your account. Like you put in 20K and now it's down to like four grand.
What's the time period there? How long does that hold? From
2 years.
The peak to the
so this is basically 11th of December 2017, and I believe Bitcoin is going to keep going up until December 2021 before we see some significant pullbacks. But I don't know how high basically it's going to go. So we just ride the trend, right? So this is 83% down, right? So that's like your money sitting at 4 grand, 5 grand, and you just don't know what's happening. When our approach is, look at which sector the money is flowing into and follow those sectors. Tech and Bitcoin, they're pretty much correlated because they're more speculative investments. People will invest in tech and crypto at a time when they're not afraid of recessions and they're not afraid of money going down. Prime example, like last year, why did tech stocks still rally while we're in a recession? Simply because no one is really afraid of a recession because they're on furlough. They're getting handouts. They're getting money for just sitting at home doing nothing, pretty much. So why would they be worried about a recession when they basic needs are looked after, right? And they got money to play with. So they brought all that money to stocks. And what's the household names at that time? Zoom, Microsoft, Apple, Tesla, all of these are basically people are talking about. So those stocks are likely to outperform the rest of the market. So speculation is high, risk is high. That's why the tech is booming, right? Regardless of where the recession is. So you just got to play that, follow the money in terms of where exactly are people investing in, and you'll be fine. But never hold on to a stock thinking this stock is the one that's going to go to like $1 million or something. We don't know that. You can take a stock, even if it's going to $1 million. Buy the stock 1,000, let it go to 2,000, take your money out. When it goes to 10,000 or something, it'll pull back to 5,000. You can buy more. There's a strategy. You can rotate, but never hold on to stocks and think they're going to go to the moon kind of thing. It's not.
Which is what makes the Cortex 15 so much more stable, but it's like a nice little sweet spot in between taking advantage of the trends, being lucrative in the short term, but also being not as unstable as these other type of things like Bitcoin and emerging tech. Which is a good little segue onto this week's portfolio. Do you want to do a coverage of that? Or before we do that, has anybody got any questions? By the way, if you haven't got a mic or if you don't want to talk, just put anything in the chat. Anything we covered that didn't make sense to you? Is there anything specifically that we didn't cover that you want to know about? By the way, this is the perfect time to ask what Abdul and I call too embarrassed to ask questions. Because in this group, there is no such thing. Like there is no... because everybody starts at not knowing anything. So if there's a question that you have that has got nothing to do with trend analysis, that it just seems to you very basic, don't be embarrassed to ask that question. Ask. We're more than happy to answer pretty much anything. Give that a minute, and if we don't have anything, we can move on to the portfolio and wrap things up.
Yeah, just quickly, Abdul Samad, I had a quick question. You may have heard this quite a few times actually. It's on Ripple. So your kind of portfolio went into Ripple, and soon after that it kind of exploded to a certain extent. So it's more, what was the indicator you kind of looked for there?
It definitely didn't go up because I bought it. I don't have that much money.
No, that's well.
I guess I get it. Now, so basically, you want to know why I bought it, and
correct. Yeah, I mean,
so timing the market kind of thing.
Yeah, if that kind of makes sense. Or what sort of indicators did you? I mean, my knowledge is quite basic on this sort of stuff. So it's more, what kind of indicators did you look at that you thought, you know what, it's a good time to go into Ripple, or get into Ripple?
The best indicator is always people who message me asking about a particular stock or a coin. That's the best indicator for me. The more people ask me, the more I know this stock is either gonna go up over the next 5 to 2 weeks, or is basically 5 to 10 days, or is gonna go up and then just crash back down. Is Ripple one of those? Now, if you look at Ripple's chart, right, it's literally gone sideways for the entire market, like literally from 2017 to pretty much now, right, to around this time, December 2020. The 2 years is just literally gone sideways. The reason why I bought it was simply I looked at the chart, right, and the main pattern that's in the chart is this level here. That's a level. Now this is right here is a September 2018 high. The price went to 75 cents and it literally crashed back down to 12 cents. So we know this high is pretty significant, which means something happened in September 2018 where sellers stepped in to sell all their Ripple holdings. Not all, but you get my point. They stepped in to sell the Ripple holdings. Then all of a sudden, the price in March 2020 bottomed at about 20 or something, 12 cents or something. And if you really trace that level back, what do we have? We have a similar level where the price actually bounced or had some form of reaction, because the price dropped to about 13 cents and it rallied all the way to $3, right? So we know this level is some form, it has some, there's basically, it's a key level where buyers are likely to step in. It's not just always buyers. Remember, there's algorithms at play as well. So algorithms are also looking at what I'm looking at, because they're coded by humans. And humans are also going to be looking at these charts. If they're technical analysts, they're going to be looking at these charts and say, okay, this is quite a significant pattern because it's been tested several times. No other pattern before has been tested. This one, twice. This one, several times, but this is like 2017, 2016. There's no way Ripple's coming down to zero. Why? Because the amount of people hoping and praying every day for Ripple to go to $3 so they can become millionaires is huge, right? So we know that these are key levels. So what I did was simply identify these levels. Now wait for the trend to change. Now price came to 2018 highs. So, and all of a sudden there's a huge sell-off. So I know these two levels, I'm right. My hypothesis is right in terms of these two are key levels. So as long as these two levels hold, price is going up. It's just going to go berserk, and that's what's going to happen to Ripple, right? So that's the reason why I started accumulating some Ripple around here. As long as it stayed above this low, I started buying some over here. But as soon as I saw this candle, this day, so on this day, right, this one here, so that's 15th of March, I knew that, okay, as long as Ripple holds this low, right here around 36 cents, this price is going to go up, right? Especially when the volume is picking up over here, especially when the volume picked up the next day. That means buyers are now stepping in, a lot of people. And this is also the time when over the past 2 weeks, so many more people have asked me about Ripple than any other time before, right? So that's also an indication that it's on their mind. People are looking to buy. And no matter what I tell people, no, don't buy it because it's risky, blah, 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 they're still going to go ahead and do it. So I know if they're asking about it, they're most likely going to act on those impulses. So the best way to do it is start building your position slowly, right? Which is what I did until I think a week ago or something, where I said, no, now Ripple is basically in the portfolio for now, right? And the idea was simple. It's breaking out of a range, right? Which is going back to 2018. We're going to buy it and we're going to see how Ripple behaves over the next couple of weeks. Now, once it breaks out of this range, the next target is easily $2.70. But we need the buyers to tell us that this is the level they're willing to pay the price of. Because look, this level is also key, because price step, literally sellers saw this level and drove the price all the way down to 45 cents. From $1 all the way down to 45 cents. So we know this is definitely a key level. So you can mark that as a level on the chart. As long as Ripple stays above this level, is going to go to $3 easily. But what we may have is price will go up, right? It'll come back down, test a level, and then it'll go back up again. This is just another accumulation phase. That's all it is. That's all. That means a lot of buyers will come in and start accumulating and everything. If we look at BNB chart, BNB USDT, which is a Binance coin. Now everybody buys Binance coin, BNB. Why? Because if you're on Binance, you can't really you can trade without BNB, but you're paying 25% less fee by having BNB in your portfolio. So we know buyers are always going to step in to buy BNB no matter what price it is. That means the supply and demand is shifting in the favor of demand rather than supply. So buyers will keep driving the prices up. So what we have to do is make sure we know which levels are important, which is this level, right? That's the previous high from June 2019. And here we are, Jan 2021, right? So almost a year and a half, right? So we know that once price breaks this level, this is going to go crazy. And that's literally what happened. Then we look at a similar thing right here. The price goes to 330 and then it just pulls back. Now, all you're doing is making sure this is the low, this is the high, and then there's the high, and then there's the low. So the price is contracting, right? And it can keep contracting like in a triangle where buyers and sellers are basically narrowing in on which price they actually agree on until one side takes over and basically shifts the balance in one favor, which would be demand. So the buyers will step in and buyers have driven the price all the way from 250 to now 450, 475, right? So when you're looking at the charts, it's pretty much, you really need to be on what's happening with the market and not project your readings onto the chart that, oh, prices at 475 is definitely going to go to 1,000. BNB is the next Bitcoin, buy up. No, these are not the things you want to be telling yourself or anyone that this is the next coin. We don't know that. No one knows, right? So all you got to do is play with the charts, see what the market is telling you. If the market, as in the buyers, are willing to pay a higher price, it can go to 2 million. But if the buyers are not willing to pay that price, sellers will only sell and drive the price back down to where the buyers are willing to pay that price, the price they agree with. So that's what I looked at basically with XRP. XRP's chart. It was basically just that level that I drew, which was the key level. Once it breaks out, that's it. It's not gonna stay at that level. And this is another thing. I was telling someone where I was basically saying that a lot of traders, a lot of financial analysts, people who are working in the banks and stuff, they approach finance as a science where it's objective. So you got to know the causes and effects. Whereas when you look at technical analysis, it's more of an art. It's more about subjective reading of the prices and supply and demand, right? Sometimes it'll work, what I did, sometimes it won't work. You just got to know at what price you're wrong and you're willing to accept that. And at what price you're willing to just, accept that this is going in the right direction and how much you need to allocate of your capital. Don't need to put your life savings in Ripple and think it's going to make you $1 million. It might do, but then again, what if it crashes tomorrow? Are you willing to accept that loss? That's the question you need to be asking. So that's what I looked at with Ripple.
No, that was very helpful. Thank you.
No worries. And you also wanted to look at Callon Petroleum, right?
Yeah, the reason I was quite curious about Callon Petroleum, as you mentioned, it was on the Cortex 15 portfolio for a while. That week it went up quite substantially, around 40%. Yeah. And I know what I did personally was keep some of the shares because I thought that there's some more potential in there, which was actually kind of correct because I think eventually it's up about 120% or something along those lines. So it's just more it's quite similar to what you were showing me for Ripple is how you were kind of forecasting
looking at the chart. You were asking mainly about the price runs into 35, 36 and it just starts bouncing, right? It's just not exceeding beyond that.
Correct. Yeah.
Right. Now, I'm just looking, usually when a chart comes in or a stock comes into Cortex 15, I honestly don't ever go back and look at their charts because that's the whole point of the algorithm. It's supposed to do the work for me rather than me being in front of the charts and shortlisting. Unless I'm trading, which is different. But Cortex 15 doesn't do that. It basically just incorporates the chart analysis, the fundamentals, everything into the algorithm. And once it gives me the shortlist that this is the stocks that you need to buy, then that's pretty much it. I'll just go ahead and buy that stock. I won't go back and try to read the charts. I won't go and do whatever. So I haven't looked at this chart, but based on what you said about $35, this is the level, right? Extend it back. This level is going all the way back to 1990s, right?
Yep.
So we know this is a key level. The amount of times it's been tested is insane. So we know that buyers and sellers are also looking at the exact same thing that I'm looking at, right? All the way back to, what is it, 89? Yeah, Feb 8, 1989. When the market opened, this was the level. Price came back to that level, broke up, right? Buyers came in, pulled it all the way back down to the same level to 34, and then it rallied all the way to 284. It pulled back, came back, and basically just hovering around this level multiple times. So we know this is a very important level. A lot of people have looked at it. Definitely algorithms have picked it up. Algorithms know these levels are like, so we know that this is a level that's going to be quite crucial in terms of the uptrend. So just looking at the chart, I personally think the chart or the stock will most likely just come in and make some form of a pattern of accumulation, right, before it goes up any higher. This in itself, this whole thing in itself is basically a correction pattern, which means the market is likely to be pushing a lot higher. But think about it. This is a monthly chart, right? That means I have to sit on this stock for a couple of years, even a decade, before I can get to the level of 131. Like, even if I accumulate somewhere here, right? Even if it comes down to somewhere at this level, right? That's like a couple of years, 5-6 years for 800% returns. There's no reason for you to do that, or anyone. I mean, you can hold on to it, right? But I think this is a level where it's likely to had hit a resistance where sellers are likely to step in. So what you can do is hold, perhaps take profit on 50%. I'm still holding on to Callan Petroleum, but most likely on Monday, I'll probably sell about 50%, and then just hold the other 50%. And I never allocate more than 1 to 2% of my entire portfolio to a stock anyway. So that's like 0.5% that's going to stay in Callan Petroleum until the trend changes or something, but we'll see. So that's basically Callan Petroleum. Just looking at the chart, you can actually see what the key levels are.
No, that's very helpful again. Thank you.
No worries. Any other stocks that anyone wants to look at?
Any other questions related to what we covered? Because we've just gone past an hour or so, so I want to be conscious of people's time as well. Mm-hmm. Is there anything in the week's portfolio, Abdul, that you wanted to cover?
This week's portfolio, no, I haven't run the algo yet for.
No. As in the past week, sorry, the one that we've.
The past week, nothing in specific, to be honest, unless there's anyone who wants to ask me. Tech stocks, because that portfolio has been down. I think someone actually asked me about the tech portfolio, if I'm going to be updating it. Yeah, I'm going to be updating it this month. It's supposed to be like a monthly thing. But if you look at tech sector in the S&P 500, is going up, right? It's basically gone to an all-time high of 141. This basically, XLK is an ETF for only tech companies in S&P 500. You have Nasdaq, which is QQQ, and I basically mentioned this entry at in the last month's portfolio, where I said I'm buying QQQ on Nasdaq at these levels, and that entry was around here. So for Nasdaq, we're already up about 10%, and that was around 50% of the portfolio on tech. So we are up about 5% just on that position alone. So that should be reaching at least 380 to 400 level XLK. If you haven't bought it, probably wait for this high to be broken, which is around 338. Wait for the price to break above that and then buy it. But the volume is definitely picking up just on this one. If you look at just on this last week, the volume is picking up. So I think tech stocks are gonna come back into play, where we need to start putting a risk on trade in tech sector. Also, another sector that's important to watch is the energy sector, because Calvin Petroleum is actually will be in the energy sector, not in any other one. So if the energy sector, if you look at it, the way it's pulled back, Calvin Petroleum's also pulled back. So we know it's linked to the sector that it's a part of. So as long as the energy sector stays above $38, you want to basically hold on to it, not basically sell it, because over the long term, the energy sector as well as the financials are going to be, in the short term for the next month, they are likely to outperform the rest of the sector. So if there's any rest of the market, so the main sectors you want to be part of, or the main stocks you want to hold, should be in the financial sector, should be in the energy sector, as well as tech sector. So I'll put the portfolio together, I'll basically make an update for April, and that should be the tech stocks. As for the financials, if I see any stocks, I'll basically share them. But some of the trades that I shared, this was one of them, right? Where these are the exclusive trade ideas where I said, okay, entry at 493, targeting 137. That's still on track. 137% on this stock shouldn't be that difficult if you held on to it. Aurora Cannabis, for whatever ethical reasons, you don't want to invest in cannabis, no problem. Ethereum, yeah, Ethereum's still going up.
Are these all in the community, Abdul?
Yeah, these are basically exclusive trade ideas that are shared in the
exclusive section. Okay, cool.
Yeah, so these are the ones that are shared in here. So if you go to exclusive trade ideas, I usually keep it up to date. So this is just a trade idea update. So these are the positions that I was holding at the time, right, when I shared it. But if you go to previous posts, new trades and update on the old ones. So these are the new trades. So Nasdaq ETF, that's a QQQ, right, which we bought a month ago. Then utilities, healthcare, and technology sector, those are again ETFs, because technology stocks, healthcare stocks, and utilities have been outperforming the rest of the market, which is why we had a position in that. Crude oil, which is, I think it was WTI, that's gone up. Exxon, Chevron. Yeah, these stocks have been going up, there's not much that has changed. NEO and First Solar Inc., they seem pretty interesting, and they're at a level where they're likely to bounce from. NEO is another stock everybody keeps asking about. That's like, people think that this is going to compete against with Tesla or whatever. But if you do want to buy it, it's definitely bouncing from a key level. So if you do buy it, I mean, I bought it a while ago, but if you still want to buy it, you'd put a stop loss below this low, 12%, 11% stop loss, and the target is still around 52%. So around $59, $69, $60. If it gets there, I'll reassess whether what to do with it. But just this pattern, basically the pattern is price has dropped to this level, it rises up, it pulls back, and now it's ready to go up, right? That's what we are expecting that the price will do. Do we have anything that will give us a similar indication? We do have this coin right here. The chart patterns are the same regardless, right? Whichever chart you look at. So here's one, same thing, right? Price dropped, rose up, pulled back, and now is ready to go. So NEO is basically around this level. NEO's around this level, and then it's going to basically bounce up. So once we gets to that level, then we will see how it basically how it looks in terms of the market. Because if you look at NEO, that's literally it. That's literally the pattern. That's literally the pattern right there. So as long as we can hold this low, it should be going easily to 60, which is about 50%, 58, and that's about it. So don't go, like risk everything, your life savings in there, but just risk no more than 2% or 3% of your portfolio. But the trade is looking good. What you can do is you can buy £500 worth at this level, wait for it to break $41, add another 500. Once it breaks above 46, add another 100 or something, and then just leave it, let it hit $59, and then you can sell it. And then we can actually look at what's going on with NEO. Bitcoin Cash has a similar pattern, exact same pattern. So price has literally dropped from the highs. It went up, pulled back, and then it rose again only to pull back. So basically, this is like a sideways pattern where what they call A, B, and then the C, and then the price continues higher. And that's what we're seeing on NEO. It's basically around this level. It's just completing the C wave. So if we are wrong, we'll likely get out for about 11% loss. And if you're right, we're making about 50%. So win-win. So yeah, that's about it. Is there any other company or stock you want me to look at, or charts?
And additionally,
or any other question?
Yeah, questions, but also we're really, we're trying to build a community now with Wealth Cortex, in which we are helping people, everyday people, as well as people who have some sort of understanding or background in finance, as well as some active traders, to really, be able to level up their game and be able to build, ideally, generational wealth down the line. To be able to do that, we want to find out what else it is that you guys want, like things that you don't understand, things that you've come across and that you want more in-depth guidance on. Are there any issues in the community in terms of the Cortex 15? Is there something that you find difficult implementing? We are looking into a custom system that we're working on at the moment, that's going to allow you to be able to essentially just click a link and it copies the portfolio into your trading platform, and you can allocate funds and then go from there. So it makes it even easier, so you don't have to necessarily go, okay, what's the ticker name for this stock? Now go search it, got it, okay, now what am I doing, kind of thing. So we're trying to make that sort of simpler and easier as well. But we are really interested in knowing what else we can do to bring more value to you guys, because you guys are our initial bunch. We haven't actually been strongly marketing out, like doing a lot of outreach, because we're still conscious of wanting to get our system, everything that we've got set up with you guys, and really nailed down, so it's really, really good that you guys are happy. And then we're going to really start pushing more people into the community. So any thoughts on that? Even any criticisms? If you don't like Abdul, this is the place to tell him. Anything, basically. And the floor is yours. Let us know in the chat, or just unmute yourself and have at it. So I think that means we're perfect, Abdul.
Yeah, that's right. I have a feeling Dr. Asad wants to say something, but he's just trying to hold it in. So
yeah, he's gonna.
Dr. Asad, you can message me privately and say what you want to say. Get it off your chest.
Yeah. Any private messages from imams that you happen to know as well?
Yeah.
Muhammad Yassin Bayat said, very good first session and very informative. That's good.
Glad you found it beneficial.
Yeah.
And also, just one more thing.
Yeah.
I mean, I'm not sure in terms of doing this on a weekly basis, but it's definitely going to be done on a monthly basis. Do you guys think it should be done on a weekly basis? And what type of stuff do you want to cover or include? I mean, it's up to you, really. It's not
the weekly Q&A you're referring to.
Yeah.
Okay. So guys, do you want the weekly Q&A to remain weekly like this, like we just did today, or is once a month good enough for you?
I think from my perspective, probably bi-weekly would work better.
Bi-weekly.
Yeah, every fortnight, yeah, would probably be better, because it gives some time for people to digest stuff as well. I think weekly is a bit of quite a commitment as well, especially on the weekends, because people are, or even monthly. I mean, I'm easy. I think it's taking the time to digest, and then coming back with further questions, which kind of then promotes the idea of collaboration as well. So,
and the recordings of these calls will be in the community as well, so you can go over any points that said. We probably should have mentioned that in the beginning, so you didn't have to take any notes if anybody has been taking notes. But yeah, Abdul, we got quite a few fortnightlies. Good idea, Shanawaz.
All right, cool. The other thing is, obviously there's the structure, the framework I wanted to proceed with, I wanted to basically do more charts because that's what a lot of people asked about, right? Generally, what I'll do is I'll basically just go over the economic indicators in terms of where we're heading as an economy, because that's more important. Where if you can predict what's like, you can only do it up to about 3 months. If you can see that the economy is growing or something, you can position yourself in the stock market accordingly. If the economy is contracting, the last thing you want to do is go heavy on stocks, and then your stocks literally just crash. That's what happened last year. So I think on a monthly basis, when we do a monthly update, I'll try to include more of the how the economy is doing. Just briefly touch on that, so we know whether to take more risk or to just cut back on our positions and just literally do half. So sometimes I do suggest that if you're investing in Cortex portfolios, you do about 33% kind of split. So you do 33% in Cortex 15, do 33% in tech, and then ideally leave the other 34% into, just aside for exclusive trade ideas. So some of the trades that basically I may bring up. AML is one of them, SSTI. So these are the trades that I'll basically share. So if you have capital set aside to take those trades, it will be beneficial, because those are the trades we'll basically buy a couple of months down the line, couple of weeks down the line. We basically sell it, make the profit, bring it back into Cortex 15. So however you want to do it, just make sure you're consistent in its application, whatever risk management you want to apply. So in the fortnightly, what I'll do is I'll take it based on the questions you guys have. If there's anything you want me to cover, I'll do that as a live Zoom session. Otherwise, what I'll do is, if it's just chart analysis or what's happening, I'll just record a video and I'll leave it in the weekly space where you guys can just watch it when you're on time. So monthly we'll definitely do on Zoom, and then bi-weekly depends on whatever you guys pose as questions, and so we'll set something up.
Yeah.
So if that's all right, then yeah.
And last thing before we rounding up, some people have been messaging us and asking about this. So I thought I'd get a gauge for the interest for the rest of the group. The question that people have been asking some people is that they want to be able to go through a structured curriculum program to basically go from whatever their level of expertise is in active trading at the moment, even if it is nearer to zero experience, to be able to get to a level where they can hold their own. So it's like a handheld program to basically take them from, the cliche zero to hero in trading. Something like that would take quite a lot of effort from our side to put together to a level where, we would be happy of its effectiveness. So before we even consider it, we thought we'd ask you, is that something that you guys would be interested in if we put something like that together? So this would be something that once you've taken the program and you've gone through it, you'd be able to basically do what Abdul does, but obviously to a lesser level because he's been at it for longer. For each of you, it'd be different because everybody has their own level of experience. But that's what we were kind of considering. Just put in the chat, or if you want to unmute yourself, yes or no, if that'd be something that you'd be potentially interested in. Crickets.
That means no. That means no.
No means no.
Exactly.
No, Shabana says I'll be interested. Okay, cool. That combined with a few other people. Shahnawaz, that's not something that would be up your street?
Oh no, sorry, I lost a bit of attention. Then no, that's something definitely that I'd be interested in as well.
Okay, cool. That's true. And Anam, Asad, and Mohammed, I'm going to assume that it's probably, because we always have a mix of people as well. Some people are just happy doing the passive stuff. All right, cool. Unless there are any other last minute questions, I think we'll wrap it up here.
Yep. Thank you for joining, guys. And inshallah, we'll probably see you in 2 weeks' time or the week after that. Have a blessed Ramadan.
Yeah.
Likewise. Thank you, everyone.
No worries. Take care, guys.
Take care. Inshallah. Bye.